Hey, how's it going, guys? I hope you're having an awesome day today. I definitely am. I'm about to potentially enter a short, so I'm going to walk you through what I'm preparing for the short scenario. And in terms of the bullish case scenario, we don't really have that much structure to guide us for a safe entry for a long just yet, but it's looking like we're getting close for that kind of scenario soon. That picture should be painted by the end of the day. But right now we have a very clear image of what we need to prepare for the bearish case scenario. So I'm going to walk you through that. And also I was asked to talk about the indicators that I use to prepare for trades and stuff like that. My rules are pretty much written out on a little sheet for you guys, so you guys can look at that whenever you want, and I'll include that in the description down below, but I'll also walk you through the indicators themselves. But yeah, let's dive into the charts and I will show you what I'm looking for. Also, I was wondering if you guys could help me with thumbnail ideas because I'm running out of ideas. So if you guys can comment any ideas that you might have for a bullish case scenario or bearish case scenario for a thumbnail, I would really appreciate it. And then I can create those for you guys and maybe I'll airdrop you some karma for helping me out. So I really appreciate that. So I'm going to dive into the charts and I'll show you what I'm looking at. So this is the 4-hour time frame. So let me just adjust this really quick. I was just pulling my fixed range here to give me an update of how the value areas have adapted to the price action. And this is for example, one of the tools that I'll use. I'll use it in multiple time frames so that we have the larger structural point of control. Not point of control, fixed range volume profile. And this gives me an idea of the limitations for the more of a macro moves within the range. So while I trade inside of this range, I can use the value area high and the value area low and the points of control as a form of guide to tell me the limitations of my entries. So if I enter a trade, I should use them as potential barriers for my targets, because you can have a target with a formation, for example, they all give you measurable targets. If we look at this moment in time as an easy example, this was the previous point of control, the main primary point of control before we started developing double distribution in this area. And we built a rising wedge, and you can see that as we came down, this was our primary target for the value area low, but in confluence with the actual primary target of the rising wedge itself, which is down here. And eventually that became the strongest point of control within this double distribution zone. I know just a lot of people might not understand what double distribution is, but basically it's when you have the fixed range volume profile build like a B formation like this. And it kind of tells you that there might be 2 points that you should be watching and not just one. And in between it, you have a valley, and that's where typically price action moves quickly. And between each valley, there's a valley wall. And those two areas normally act as strong areas of support and resistance. So you see how price action behaved around that. You can see how price action is behaving around this level as well. So they kind of give you an idea of where support and resistance is going to be formed and to be mindful of them when you're doing your trades. You should always include them as potential barriers towards your target. If you're targeting something and it's in your way, you should set an alarm near those areas so you can avoid getting caught in a bad trade. It's good to be reactional, even though, some people might say let your trade play out until it hits your target, but there also are warning signs in the market that could warn you to get out early if something were to occur. So for example, I closed half this trade over here because of a massive sell wall, and we ate through that wall luckily, but you can see how we had a huge rejection here for a moment before we ended up going forward. So it took a couple tries for us to break through it, and then when we did, we got a good strong continuation. But anyways, so we have the uptrending momentum broken. That this is the evolving momentum. So when you enter a trade, you can draw these trend lines to help guide you on what kind of behavior you can expect in the future. And when these break, they tend to give you high volume drops while you're in a long, and they kind of warn you that we could end up going down much harder if there's a confluence with a strong area of resistance, or it could just warn you that we could be ranging and building a structure. But it is a pretty good rule of thumb to prepare to potentially close your trade after the loss of support after breaking that momentum. So it should get just a good tool to have for setting alarms so you can keep your eyes off the screen a little bit longer. And they act as really good guides for evolving your stop loss too. And then there's the broad momentum as well. And the broad momentum is basically, it's stronger than the evolving momentum in 90% of the time, and they act as really strong levels of support. And you can use this on any time frame, but the longer the time frame, the more important, the stronger that it is. If it wasn't for like my understanding of daily momentum, like I probably wouldn't have been confident with the long position that we jumped in on. Because if you look, this is the same kind of concept. That we have this uptrending momentum here. Like it's not like the strong as the legacy support, of course, but it's definitely something you need to be mindful of. And I use it in confluence with knowing my exits for my macro trades. So it helped me exit this macro trade, for example, here, and it helped me prepare to, take some profits and close my trade over here as well. So yeah, they're really, really important, but the daily is the one you really got to watch because it's like kind of like law and knowing how to anticipate really strong levels of support. And you can see how it behaved in the lower time frames here too. But anyways, going back into the charts, I'm currently preparing for, just zooming in like crazy here for you guys, the loss of this neckline support here for a potential double top that we're forming against the point of control. So we lost our momentum already. We had a high volume reaction to it, and we bounced to the local point of control and value area. This is really, really young, so it's tough to actually make safe trades within it unless you're using high leverage because the gap percentage is relatively small. And by the time you get a safe confirmation of reversal, you're eating up like half your reward by the time it gets to the target if you're doing value area trading. But as time progresses, and let's say we stay up here for a few more days, then you can you'll see a structure starting to form that you can actually trade within safely. But yeah, right now I'm waiting for a 15-minute candle close below 65,672 right here. If I get that candle close, I'm going to be looking for a structural guard. And right now we don't have one that won't destroy our risk to reward ratio, because our risk to reward ratio would be like a 1 to 1.2 if we use the most recent structural guard. So I'm kind of hoping for a bounce off of the value area low of this zone that will give us a different structural guard. We have this uptrending support, so if we end up breaking through this, we might bounce off of this level and have it act as resistance and then get us a lower low, and then we can use that as our stop loss guard. Of course, it's not up to us, but I'm just letting you know that's what I would prefer to happen before entering a short, because I'm not going to be entering this short if the risk to reward ratio isn't safe, because I know that there's a barrier below us right here at 64,688. Based on this consolidation here, you can tell that there's some demand in that area, so we could get a strong bounce, and in confluence with that, we have the broad momentum from here that could also produce a bounce, and we can actually end up building a structural formation with this being the resistance and this being the support, and then we can range between that area until we have a good solid structure to help define for a longer, like a long-term long position or a short position here. But yeah, that is pretty much it for the short term. Now to go over my indicators, of course we have the fixed range volume profile. You can find that over here on the left when you go to your long and short position tool, and you'll see under volume based, there's fixed range volume profile. I have it starred because when you star stuff, it creates a navigational menu here for you and allows you to get to your tools a lot faster. So it's in my nav bar, so I can grab it quickly and easily if I ever need it. And Then obviously trend lines. I use trend lines with all my stuff to help guide me with momentum, find where I would likely see the order books behave. And that leads me to my next indicator, is basically the order books. So there's two different types of order books I like to use. My favorite one, but it's kind of limited, is book maps. So book maps shows me where strong levels of support and resistance are based on limit orders in the market. So when you set up an order, when you do your trades, you can choose to do a market order, which basically enters you in at the current price, or you can do a limit order, so you can enter or exit at prices that we have not reached yet. And that's what this indicator does. It tells me what people are doing with their limit orders, so we can anticipate bounces inside the market. And you can use it as a tool to identify if a trend line is going to be honored. And it's kind of neat because you'll be able to see some levels will act as horizontal levels of support and resistance. So you can tell ahead of time if we're going to build a certain types of formations, like a double top or a double bottom, or an ascending triangle which always has like a horizontal level of resistance, or a descending triangle which always has horizontal level of support, and stuff like that. So this tool basically allows me to kind of see the future on how people are going to behave. Now, why I say this one's kind of limited is because it only allows you unless there's something I don't know about it, but I'm using the free plan. So it only allows you to see like a small amount of exchanges at once. So I like to use like the free one, and that's free too for a certain amount of things. But there's a free one that I like to use all the time, which is the one on CoinGlass, because it shows me Binance, it shows me OKX, it shows me BitMEX and Bybit all together as a single order book. And this is the same kind of thing as what you saw before, except the visual representation is different. And from here, I'm looking for walls for support and resistance, because that's where most of the orders are compiled in a single location. So you'll see like steep locations on the order book, and that's where there's a bunch of orders consolidated at a single price. So if you're planning on getting out near a certain target, for example, and you see that there's a big wall just right above your target, it might warn you to say, okay, I might need to undercut what I was already planning on taking out, and just like get out a little bit earlier to make sure that you're out before them. Because you can't just set your order, and a lot of people make this mistake, you can't just set your order in the same location as them, because you're actually going to be at the end of a queue. And I'm sure some of you guys have experienced this where it hits your limit order, but it never filled most of your position or didn't fill any of it at all. It's because there's other people in front of you in line, and you have to make sure that you're closer to the front of the line as possible. So it's best to try to undercut it a little bit. And then my next indicator that I like to use to help control my bias, because this is like a tool that market makers will use to tell them where the liquidity is. And if you kind of get yourself in the mindset of a market maker, you can kind of see what kind of walls they might build in the order books. And the walls can help define what kind of direction they're trying to push the market. And then this is the liquidation heat map. This tells you where stop losses are aiming to be hit. And this is where people are using like high leverage and where they're going to be likely to be liquidated in the market. And you can zoom in to see what happened in the last 24 hours and see what the impact is there. And you're always going to get lower volume in this time frame. And then you can zoom out, and I like to look at the weekly for my short-term stuff. And this can tell you, like, hey, look at all the people that got liquidated from that pump. Like tons of people got liquidated from that pump. And now we're building new forms of liquidity. And right now it's below us. So that's also why I'm more prepared for the bearish case scenario, because there's more money below us right now. And so it gives us a idea that they're building a sell wall above us, preventing us from breaking up above it from the order books. And then they're more likely going to be targeting below us, and they're pressuring the market to go down. So eventually traders aren't going to have a choice unless they ape in with millions of dollars and destroy that wall, because market makers can lose too. But they're more likely to win because they have most of the money to pressure the market to go a certain direction. But yeah, that's what I'm looking at in terms of that indicator. And you might see me use the RSI a lot too. This is the RSI down below. This is a little bit of a different version. This one's called the divergence. If you type in under indicators tab, divergence, you'll see RSI divergence indicator. If you add that to your chart, it's just like the regular RSI, except it's like it reduces your workload a little bit. Eventually, you're going to think of this as a job if you want to be a day trader, and you want to try to make things as easy as possible for you. And that's part of the reason why I don't use too many indicators. I just built a set of rules for myself that makes it as easy as possible to make money. And if you're going to make your job, become a day trader and make this your job, you want it to be easy to make money. You don't want to fight for it. So don't add too much to your screen that makes you have analysis paralysis where you're afraid to take action because this is saying that and that is saying this, or this time frame is saying that, and this time frame is saying that. I look at the daily and I do my analysis on the daily to see the strong levels. And then I go down to the 15-minute so I can see where my entries are going to be. And I'll use the strong levels from the daily as my barriers. So that's my 2 cents on the indicators. It's not that much. So in the RSI, I'll use it as a tool. So basically you'll have 3 strong levels to watch. There's the 40 level, the 50 level, and the 60 level. And you'll notice if you put horizontal lines on them, because you can draw trend lines on this too. You put horizontal lines on them, and you'll notice that it's really hard to make it perfect. So just go to your settings of the trend line, and you just type in the coordinates. So this is the 60 level. I usually like to make this one red because I'm preparing for more bearish case scenarios, even though above the 50 level is where the bulls are in control and it's telling you that things are more bullish. When we're at the 60 level and you see it act as a form of resistance like it is now, it gives you a warning that things might be going down and you should prepare. And everything above the 60 level is much more likely to build bearish divergence. So it gives you warnings that bearish divergence might form. And then we got the 40 level, and same kind of concept, and I'll make this green. So I'll be more prepared for the bullish case scenarios, and you'll see that it'll act as form of support. So if you're in a short, for example, like we're preparing for, you should watch to see how the market, the RSI tells you, like, it's kind of like a stress indicator by using the previous 14 candles and a moving average to define this structure you're seeing in the RSI. And you can tell, like, based on the behavior of the 40 level and then lastly the 30 level, if we're going to start to see a potential bounce here relative to the price action. And that's going to take some time for you to understand, but honestly, it's a really great indicator just to tell you how the market's behaving, whether it's being oversold or overbought, and what you should prepare for. And you can use, you can actually make it a part of your rules if you wanted to say, I'm only going to be entering shorts if there's bearish divergence above us. That's going to reduce the amount of trades you get, but it's likely going to increase your win rate. So you think about that when you're adding stuff to your rule book when you're trying to become a trader. Bearish and bullish divergence is great for range trading, by the way. If you're just trying to trade ranges and you only want to enter trades that have those divergences, then you'll add to your win rate, but obviously you'll reduce the amount of trades you do. High quality trades, basically. But anyways, there's obviously a little bit more indicators that I might use once in a while, like the VWAP. I'll always have my screen because it kind of gives me an idea of the bias of the day. And the VWAP will reset every single day and create this huge spike. And when you see that reset, you'll notice that there's going to be a change in the behavior of the market. Like as soon as it resets and it's no longer below the price action, people adjust their bias sometimes to the VWAP. So this gives you an insight of other types of traders' mindset. And as soon as you see that reset, the behavior will start being, okay, now it's above the price action, and it'll help drive the price down. You can see another example. It was here, the day reset, and it became below the price action, and it helped drive the price up, and so on and so forth. There's always a big spike, but you can basically use your clock to tell you when that reset is going to occur. When the daily candle closes, the VWAP will reset in sync to the current price action. But this video is now 20 minutes long. All right, I'm gonna start editing this video for you guys. If you guys have any questions, you can reach out to me in the Discord. You can have yourself an amazing day. I appreciate everyone who is subscribed, and stay profitable. Thank you. Bye.
Hey yo, I'm all about the crypto. In case you don't know, it's the haste of inflation, the crazy sweep on the nation. No baby, every blockchain and created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you. Let me enlighten